Good morning. This is Jovine from Behind the Markets. Happy Wednesday. Today is Wednesday, March 5th. And today I want to talk about something that I have never talked about in any of these videos all this time, and that is Muni Bond Funds. A friend of mine asked me about them recently, and I thought, heck, if he's asking me about them, maybe some of you guys have questions about them. I figured I'd talk today about Muni Bond Funds. Muni Bond Funds are bonds that states issue. Your local state, I'm in Florida, so Florida would issue this. If you're in New York, would issue it. Georgia issues their own bonds. Every state issues its own bonds, and these bonds are triple tax exempt, as I learned when I took my Series 7 way back in 1991 and 92. And what's great about these is they tend to pay a little bit higher yield than U.S. government bonds. My friend was saying to me, I want to invest in Muni Bond Funds. And they're a great place to invest. You have some good ones out there. The biggest ones, and I just have these notes down here on my screen, the American High Income Municipal Bond Fund, the Goldman Sachs High Yield Municipal Fund, the Nuveen High Yield Municipal Bond Fund. So there are a lot of good ones. Those have gazillions of dollars worth of assets. So there are a lot of good ones out there. And BlackRock recently opened up an ETF, which I thought was great too, the iShares High Yield Muni Active ETF, which is symbol is HIMU. The fund has a net expense ratio of 0.42% and a 30-day SEC yield of 4.5%, 4.54%. So basically, you're getting over 4%, 4.07%, which is great just by being in this thing. But it's just, again, the symbol there is HIMU. Now, when my friend talked to me about Muni Bond Funds, what I said to him was, look, I would be a little hesitant to jump into Muni Bond Funds because what we have is a situation where, as it relates to fiscal policy, it looks like Trump is going to slash Medicaid spending, which means the federal government right now, the way it works is the states actually spend the money. They're like the hands and the arms, but the federal government funds it to the states. So basically what would happen is a lot of states, if the federal government stops funding this to the states are going to be faced with a choice. They're going to either cut that kind of spending, cut Medicaid spending, which is what many of them are going to do, probably half, if not more. The other choice is to run deficits themselves. So the states could really blow out their own budgets. So basically, what I said to him is what I would say to you is, from a fiscal policy point of view, I still think a better place to be for yield plus safety is in short-term U.S. Treasuries, period. And we discuss my favorite short-term U.S. Treasuries in Midnight in America. And we also discuss 4 steps that you need to survive a market crash. Because look, folks, we all know that over the past 30 years, over the course of my investing life, 33 years, has it been 34 years, we have one stock market crash every 4.8 years. So, we're due. Let's put it that way. We are very due. And what these 4 steps does is it shows you the exact 4 steps that I took in 2008, 2009 to make more money in those years than I did at any one year or period of time in my life. And one day, frankly, up until that point in my life, I had never done that well as an investor or as a business person than I did in 2009 when the world was coming to an end and the market was crashing. And that's just because I knew exactly what to sell in advance of the market crashing, and I knew exactly what to buy when the market did rebound. And I want to hand that off to you. And what I did is I actually wrote it for my children. And this is basically the same 4-step system that I'm handing down to my children. I've used it in many bear markets, and it's done very well. The proof is in the pudding. So I'm handing this to my children. I wanted my children not to grow up to be suckers, to not know how the deal was, the game behind the game. So I wrote this for them. I also offer it to you, to members at Takeover Targets. I released it on Takeover Targets, and I urge you to get a copy because, ladies and gentlemen, there are great opportunities in the market right now. But fasten your seatbelts and prepare for a bumpy ride. Anyway, that's all I have today on this lovely Wednesday. Have a wonderful day. I will see you tomorrow.